Welcome, welcome to Shine's Room Midday Psychology installment. We talk a little bit about the emotions side of trading. I'm going to talk to you about a personal subject, something that is near and dear to my heart that I call the circle of trading. Now, I say it's a circle of trading. It's a series of steps, but they lead back to the start, and they all reinforce each other, and it's nice and reaffirming. So briefly, I'm going to tell you the steps. We can talk about them in depth, and I'm sure we've all considered this before, but I think codifying or systematizing what you experience at the trader level is really important in your trading development. Broadly we talk about this all the time, but not shooting from the hip. Nobody wants to be fully discretionary because I think that puts such an intense amount of pressure on your discretionary read of the market. It requires you to be incredibly accurate. And I think, as I was saying before, at about 10:30, 11 earlier today with 8 Ball, this business involves uncertainty. I think we all have to be very comfortable with sometimes low visibility environments. And the only real way I've found to endure those low visibility or high volatility environments, something like what we've been experiencing lately, where it's this binary outcome, fiscal cliff type, unidirectional up or unidirectional down type market. That's actually an incredible opportunity for a trader because you can still trade risk appropriate size, and that's step one, even in a difficult or tantalizing market. When you see 20 handles up or down on the S&P, I think everybody thinks to themselves, only I could have had that with full size. But I think we never look at it from the other perspective. What if that had gone against you and you had been trading full size? It's obviously disastrous to be over leveraged. And I think it's no surprise that just like speed in automobile accidents, leverage is the #1 factor in screw-ups with traders at the retail or the professional level. It really always comes down to how leveraged you are, because if you're obviously less levered, you can afford to make rational decisions in the appropriate time frame rather than, and this is part number 2, emotional decision making. I don't think anyone is unfamiliar with this. We've all, and especially I'm thinking early on in our trading career, had the point in time where we made one terrible trade and it went against us. And instead of making the objective decision to exit and say, man, that hit me right in the mouth, I'd rather take one punch to the face than a couple body blows as well, we hang on to these trades, right? By avoiding emotional decisions and making only objective, rational decisions, because we're trading risk-appropriate size. We're not trading 300 shares of Apple. We're trading 100 shares of Apple. I'll tell you what, I'll actually give you guys a bit of a story about me. When I was starting trading, I wanted to trade Apple very badly, but I didn't have almost any capital to trade it. I had literally 50 shares worth of Apple. But I noticed that that was one of my most successful equities because I was only taking trades that, yeah, there you go, excellent picture. And believe me, I've had so many of those days, but I think it's testament to my skill in the next 2 steps that I'm getting to of how I've persevered. But, trading Apple 50 shares, what I was saying about this is I noticed it was one of my most successful equity trading vehicles, because if I was risking 2 points, that was my sort of internal measure, right? I could only really afford $100 of risk. I was only trying to make about 5 points, a 1 to 2.5, give or take, risk reward. And this worked out phenomenally well for me. I could never understand for the longest time why that one high-priced equity was something I could good point. Avoid that. That's not what I'm advocating. Yeah, I don't want you guys to get hit in the face. I couldn't figure out why that 50 share, Apple sizing was so good as opposed to a couple hundred shares or 1,000 shares of other lower priced equities. And I realized that, like I was saying with point number 1, trading risk appropriate size, and point number 2, avoiding emotional decisions, those obviously go hand in hand. I was getting beat up because I was trading outside of my comfort zone. And I didn't recognize that I was nominally risking significantly more, even in shorter moves. 10 cents, let's say, on Citigroup would be much more painful than 2 points on Apple. because I was not using consistent risk-appropriate sizing. So I'm admitting to you guys there were darker days in my past where I was not as successful. But of course, we've all come through quite a transition, if you will, a learning process. And I think this is what we're talking about here today. Learning objectively from your mistakes or from failed trades is really what this is all about. The only bad trade is a trade, well, of course, one that you don't survive from, but one that you don't learn from, that you can't understand objectively why you took that trade in the first place, or what you gained from having taken that risk, even if it was not a money-making proposition. So, sorry, moving back to the circle of trading. By avoiding emotional decisions, we are able to manage trades to fruition. Losers can be exited quickly and painlessly because we're trading only a risk-appropriate amount. It's never going to be a trade where you feel it must work out, or, and I'm sure we've all said this to ourselves, again, as perhaps lesser experienced traders, right? Yeah, be a machine, absolutely. We've all said this to ourselves before. I can't take that type of a loss. Well, that's ridiculous because you're already at that point. You are already in that arena of loss. It's better to cap the loss and recover from it through, and this is point number 4, objective analysis. Understanding very clearly, was that a discretionary failure or a systematic failure? And this is a little sub-point, apologize for digressing, but this is why having a rule-based approach, a systematic approach, is vastly superior to being discretionary. I alluded to this earlier. It requires you to really be a machine 100% of the time. But as a human being, you're never going to be discretionarily right 100% of the time. It makes you feel terrible when you yourself have an opinion, if you will. Any ego whatsoever clouding your judgment is disaster. I want you guys to associate ego or opinion with poison, because it really can absolutely, I guess it really cloud your judgment is the best way to say it. It just gets in the way of, I love how you sneak that in just quietly from the side of the screen. And what the guys are referencing here is, be a robot, be a machine. Come at this like you are going to battle, and seriously have that mindset of it's either me or them. And if I'm not here to play at the highest level, there are people who are. And even if you are a retail trader trading 50 shares of Apple, there's nothing wrong with that. It's the quality of your trade setups. And as I'm saying here, point number 4, being able to review with clarity or objectivity. There's no shoulda, woulda, coulda. There's no, like I said, ego, poison about, oh, well, I should have done this because I was a... It shouldn't be so personal. It really should be a systematic approach, because if the system needs tweaking, that's perfectly fine. You don't approach it from an ego-based or personal, satisfaction type thing. You can get your satisfaction from, like I'm saying, a rule-based objective approach. And that is, like I'm saying, what leads back to point number 1, which is trading risk-appropriate size. When I did this type of analysis on my own trading behavior with the Apple, for example, I recognized that I was never exiting a discretionary moment where I said, oh, this looks so bad, I don't want to take that kind of risk. It was much more about the trade is either something I've identified and know that I'm comfortable with the risk. And so even failed trades, like I'm saying, not only was it nominally in my wheelhouse, but viscerally, the feeling. It didn't take away from me when I experienced a losing position. I, in fact, was glad that I was able to exit and exit with control. It's like stepping out of a car after it's come to a complete stop versus bailing at 55 miles an hour because you made, a wrong turn or missed your exit on the highway, right? You take the next reasonable exit and you stop the car and you get out of the car calmly. But and I give these silly analogies because I want them to stick in your mind. I want you to think about the next time you're making emotional, discretionary decisions, right? I want you to think about jumping out of a car at 55 miles an hour. And yeah, no shoulda, woulda, coulda. Spot on. It really, and I think about a bunch of people who have said that to me because, and I know that the feeling of missing a trade is the most powerful, painful experience because your analysis was right there. If only you would have seen it. So what? This is the stock market. There are so many commodities, so many foreign exchange, currency pairs, bonds, such an untapped resource for traders. And I'm surprised more people at the retail level don't take advantage of futures trading in various respects. But so anyway, I'm sorry, I get a little off topic here. Let me paste these into chat just so you guys have my my little circle of trading, if you will, and you can see how they relate. One second. Number 1, trade risk appropriate size. Number 2, avoid emotional decisions. Number 3, manage trades to fruition. And finally, review with clarity and objectivity. And as you can see, like I'm saying with the Apple, I realized that I was making decisions I was not only comfortable with, but that were often profitable because I was allowing myself to pay myself for the risk I was taking. I could feel comfortable holding to that target of 5 points and occasionally more because I identified, listen, this situation is improving and I've been in this trade long enough to see I can survive a drawdown. Having that visceral understanding of yourself and sort of a Zen personal psychology interpretation of the market, at least being aware of it, is something that people like Denise Shull, who is an expert market psychologist, have made a career out of. And she is really one of my heroes in trading, as well as, of course, Jack Schwager, the author of the Market Wizards series. So if you guys have any questions, feel free to throw them into chat. If you guys want to post more pictures of robots, that's perfectly fine. I'm kidding. I'm just messing with you. Yeah, exactly. Getting hit in the face. Well, I think because we all know that feeling and we know that the pain of losing money is so much stronger, that memory, I should say, is so much stronger. It's more lasting than the money we could make. How do we deal with that? How do we address that? Greg says, when's Melnick coming back? I think Melnick will be back at the beginning of next week. We're all Mark Melnick fans here. He's a funny guy, as I always say. I love that he's so passionate about the market. You can hear the intensity in his voice. 8Ball's cool. He's calm and collected, man. He's the robot. Hey, thanks, Steve. I appreciate it. Well, hey, and I said this before, thanks to you guys as well. I really find the chat incredibly helpful. I like that it's always very focused discussion. And I said this before. I've said this on my volume-weighted average price chats about Shine's Room, but this is why I stick around, because we mean business. You know what I mean? I like that we can laugh from time to time, and I like that we have our downtime, but I love how clear-headed everyone is here. And that's why I like talking to you guys seriously about trading development. It's something that I know everyone in here takes seriously. Maybe except for 8Ball. He's kind of a joker, man. I don't know. Can't trust the guy.
You can trust me. I'm all right. You can trust me as far as you can throw me.
Too funny, man. Too funny.
Great. Hey, Zach, I appreciate the insight. No doubt about it. I know the community did as well. Great work. Again, to look to you for support, look for your insight. I think it's top notch, and I will always reach out without hesitation, because I know you're a good man, and I listen to you